The Nasdaq has experienced a nice period, a nice run here, but what you're seeing just recently over the last couple of weeks is, one, we have a double top, number one, and number two, if you were to extend this trend line that I started to draw, you will see we've lost uptrend support. Is this catastrophic? No, but I do think that a retest of the July and June lows right around the 7,000 mark is in order. I am short the Nasdaq against the long S&P position that we'll talk about. So yes, I do think there's more short-term pain, but long-term I don't think so.
So you think possibly we could go down about 700 points?
Well,
where are we now?
About 72 or
okay.
so. So yeah,
on the 100, yeah.
So 5% would be 3,500 or 350 points. So not, a 50% retracement of a move that we've seen since May is not obnoxious.
And when you look under the hood of the Nasdaq 100, what concerns you the most? Because we've been highlighting the fact that the FANG Plus index, right, that's in correction territory. We haven't seen much leadership from this group in the past month or so. And today we've got the cloud stocks joining in, the payment stocks joining in.
Google News didn't help. We haven't seen FANG make a new 1 month high at all. So yeah, tech is under a lot of pressure. Netflix is really a very poor looking chart. We just did that on Trading Nation, the other show we're doing. So yeah, technology certainly looks to be in trouble though, but I think this is the worst case. I think the S&P, small caps, Russell are in a supported area. However, I do think interest rates are really sending ripples through this market.
Okay, so let's clear off the screen and take a look at the next thing that we're going to take a look at, and that's interest rates, because obviously that's a big concern of the markets. How much higher can rates go? Overnight, we saw the 10-year go above 3.5.
Yeah.
So that was kind of crazy.
Yeah, this is a really cool chart. I'm really excited to have a conversation with you about this. If you were to take a survey of investors out there and you ask them, what's the long-standing correlation of stocks and the 30-year bond, what do you think most people would say?
They would be inversely.
I think that's what everybody would say.
But the reality is that they're positively correlated.
They're positively correlated. Look at this. In blue on the left side is the S&P. On white on the right side here is the 30-year bond. This isn't the yield. This is the bond. Number one, you can see that they basically go in the same direction. On the whole, they're positively correlated. Down here, this is the correlation. I'll just do CORR. There's only a few periods where they're, in fact, negatively correlated, like what's happening right now, and this is where an issue starts to come in, because let me just pull this together real quick. We went negative here in the 80s and 90s. We saw some market volatility. We went negative here in 2000. We stayed negative, came back to unchanged, went back down 2009, and here we go again. We're going negative again with this divergence between bonds and stocks.
What does that tell you? I mean, in terms of what the markets have done during these negative periods? Bam, bam, bam.
I think the exception is inverse relationship between stocks and bonds. We're going into that exception period. This is the reason we're seeing the volatility. Moreover, if we go to the next chart, which is just the 30-year bond by itself, regardless of how you draw a trend line on the 30-year bond, we've lost uptrend support. This is a 38-year break in uptrends in bonds, downtrends in yields.
Okay, so that means that yields will go higher in your view.
I think if technical analysis, if history is any guide as to what's happening in the future, there's a lot of periods where we saw spikes and runs into safety with bonds, 2000, 2007, and all of a sudden we've just...
Okay, I want to bottom line this because we're out of time.
Yeah.
So you see a break higher when it comes to yields, and given the negative correlation that we're seeing now between what's going on with bonds and stock, like what do we see for stocks?
Okay.
What's the bottom line for the S&P in your view?
Can I keep it one? Can we just flip to that chart real quick?
One last
and
one,
then I
because I like
you
it,
let
Todd.
you go.
Otherwise, that's it.
S&P is undecided. We're right midline from the
All
2009.
that's telling me the S&P is undecided.
If we start to break this uptrend right here, then we have problems. So can the markets adjust
So we'll
this
watch
new
that
regime?
uptrend.
If we start to break this, then the markets don't like this new regime of high rates. If they do that, can adjust, and we stay technically supported, then it'll be okay.